All right, so we got gold, euro. Let's just put dollar bottom right. See how the reaction comes in. Number should be dropping here in just a moment. Euro dollar initially driving higher. S&P doesn't hate it. Gold making a move higher. Dollar down. Nothing dramatic here, guys. It does. I'm going to go ahead and say it looks most likely like claims were not a big surprise. Let's see if I'm right about that. Okay, yeah, not too much different than what was expected. 217,000 unemployment claims compared to 210. If anything, any number that's above the number is going to probably cause, weak dollar and potentially some strength in other markets. So, where are we at? Again, biggest focus for me is continuing to trade the S&P. I do have several markets I want to watch. I want to, just because I have an S&P 500 trade, sometimes people will say, well, Nick, do you take any other trades at the same time? Absolutely, I do, right? If there's another setup I can find, there is nothing stopping me from looking for another trade. Now, with that said, I have some rules in place within my own trading strategy that keep me from taking 5 different really correlated trades. Let me give you an example. Just because I'm long on, let's say I bought dollar yen, right? If I bought dollar yen, I don't need to also buy dollar CAD and dollar Swiss at the same time, right? Because that's a triple dollar bet, right? Risk management is all about risk adversity. You're trying to keep away from risk as much as possible while still maximizing possibilities in the gains department, right? So when we talk about the S&P 500, I'm trimming risk, right? I know that the market sentiment has been incredibly pessimistic. I put out a whole thesis. I've been very transparent about my entire journey with indices. And let me just be very clear to the naysayers who've been watching me. You've seen me be very wrong about the indices. I was really early on my NASDAQ and S&P bullish idea. Well, the turn of the month came. I waited so patiently for it. We started to see that break, and I think seasonality is a tailwind for us. If you're somebody who's watching the NASDAQ this month, let me offer you a perspective here. NASDAQ outperforming the S&P even, right? This one's doing even better than the S&P 500. Clean chart here, clean breakout, beautiful price action. I think we have room to the upside for perhaps the rest of the year. Now, is that going to be a straight shot? Probably not. No, there's likely to be wave structure in markets, right? So again, I have I've made my position very clear. I was early on the NASDAQ, wrong in front of the entire YouTube community, got blasted for it, and then now we're seeing a little bit of a nice jump. Do you trade NAS 100 on WeBull? Yes, you can do so, but you just trade QQQ. Okay. It's called an ETF. It's an exchange traded fund. It is just, at the end of the day, guys, the underlying thing that you're trading, whether you're trading NAS 100, QQQ, NQ, MNQ, right? All these different symbols, they represent the same thing. It's the NASDAQ, right? So QQQ is an ETF that tracks the NASDAQ. So you could trade NASDAQ. For me, like I said, I'm trading the S&P 500 with one of the, of course, the most popular symbol on earth, which is SPY, right? SPY. Everybody watches the SPY. And so I've got that trade on from yesterday's pullback, picked that one up and held it through the Fed meeting and was very much rewarded for that. At this point, like I said, I've trimmed my risk on this trade, and goal is to try and hold this one as long as possible. A quick look at the dollar here, guys. And also, I should say something. Let me show you guys one piece of information that tipped me over the scale. So like I said, I was patient on the indices. I took a couple losses, and it took a lot to just be like, you know what? I cannot trade this until I get something that shows me it's time to be long indices. And why did I pick S&P and why didn't I buy the NASDAQ like I had been trading? I had a lot of questions in my Discord chat. Somebody asked, why not NAS? Simple reasoning. And again, it actually would have been better to buy the NASDAQ. But in this case, what I liked about the S&P 500 is look at the difference in the COT data. So if indices traders here for a second, I know we'll get to gold, we get to dollar, guys. I know there's a lot of indices coverage going on right now, so I will get to the other stuff. Don't worry. We got Marco coming in too as well, and he's more on the currency side, so we will also be talking currencies in just a minute. So in terms of indices, what I saw and why I picked S&P 500 is the difference in the last COT report was night and day. It seems like big money made a huge shift into the S&P 500 rather than they did in NASDAQ. So I was bullish on both, but the S&P 500 had more institutional interest in the last go around. So I picked it up. I picked up S&P, and that is why I'm on that, right? So yeah, USD is long in Edgefinder, but the market shows short. The Edgefinder has been bullish on the US dollar pretty much most of this year, which has been an incredibly good trade.
Did you know our market scanning software, the Edgefinder, just got even better? Check out our newest asset, Bitcoin. That's right, Bitcoin was our most requested feature update, and we're so excited to announce Bitcoin is finally here with plans to add even more crypto in the future. We've also updated our most popular feature, the Smart Money Tracker, adding even more data than before. The Edgefinder not only automatically scores 8 different metrics for each asset to give it an overall buy, sell, or neutral score, but it also keeps track of bank and analyst positioning, stores historical fundamental data, shows how assets are trending throughout the day, and so much more. Right now, our YouTube viewers can get the Edgefinder at a discounted price when they use promo code A1YT. You can check out the Edgefinder with the link down in the description below, and again, get it for the special discounted price when you use promo code A1YT at checkout.
Kind of impressive movement here. I mean, I've been short bias on the Euro USD for quite some time. You guys are technical traders, and one massive advantage that I see with technical traders above fundamentalists like myself is that for me, if the Euro breaks out, I am still bearish and I don't touch it on the long side. Whereas technical traders, because I have a bias, right? I have like this whole research, this whole analysis where I'm leaning more on dollar strength than I am on the Euro. And it will take me some time to turn the ship and be bullish Euro USD. I can't just one day be, I've done all my research, be bearish in the Euro, and then it breaks out and then I just change everything. For me, what that ends up meaning is that if I'm bearish and this price action breaks higher, I don't necessarily go long, but I might just become neutral. Like I might just not have any trades. I might not sell. I might not buy, or I won't buy until something really, truly, fundamentally changes for me. Again, with technical trading, what's kind of interesting is that if you get a technical signal that just completely erases a bearish bias or a bullish bias, you could simply change directions and go with the new flow of the market. So I want to ask you, Miko, and Marco, both of you guys, I'm just curious about this because you have no loyalty technically to a fundamental bias. If the Euro breaks out, are you suddenly more bullish on the Euro? I mean, is the Euro oversold? And I'll go to Miko first with that question.
Yeah, I mean, you pretty much nailed it on the head, to be fair. But with Euro USD, I've been pretty bearish myself as well. As we've been coming down, consistent low lows and lower highs. Recently, we've been in a little bit of a weird market structure, which I've been mostly bearish through as well. But I was expecting, or at least hoping for, Euro to start taking out some of these lows here, but especially with the news yesterday. But we failed to do that, and since we failed to do that, we actually respected this low here. So although price is kind of just moving sideways, it looks like Euro is trying to reverse. I mean, we're seeing a lot of momentum right now, but effectively, I want to see price break through a high or break through a low, because as long as we keep respecting support and respecting resistance, there's nothing there for me. I'm just classifying that as consolidation. But if we can pick a direction, aka break through a high, break through a low, at this point, we might be breaking through the high. At that point, then I will be shifting my bias from bearish, which has been to now bullish. Now on the higher time frames like daily, weekly, monthly, we still had a pretty impressive leg to the downside. So I'm anticipating that this bullish move might just be some retracement for maybe some sales later on. But for my trading style, I'm mainly focused on the 4H time frame. So if the 4H does reverse and start giving me some higher highs and some higher lows, missed the high there. If it starts giving me some higher highs and higher lows, I'll be more than happy to look for some buy positions and kind of ride it up until potentially you might reverse back down again, and then I'll shift my bias again. So I very much focus my attention in terms of which direction I want to trade based on the full H structure. If the full H gives me higher highs and higher lows, that's the way I'm going. If it changes, then I'll change my bias as well. So yeah, if Euro does take out that high, I would be looking to follow that higher. Of course, looking for some pullbacks, maybe a retest at that level. Does depend how big of a breakout we see, but if you do get a confident break, then I'll be more than happy to look to follow Euro USD higher. But at the moment, just neutral, waiting for the breakout, I would say.
And I guess, Miko, while we're on the topic, well, we've got the screen here. Dollar yen, what an interesting move that we've seen here today. If you pull dollar yen up, I'd love to get your thoughts and Marco's next, because this is the Marco pattern in some ways. You've got a huge pop followed by a huge drop, and what's concerning to me is if I mark out support around that 150.5 mark, let's call it, it has not it tried to hold. You have a little bit of a wick action going on, and now we've just started to fall through support. Again, my wonder is if there was so much hype and it was perhaps maybe a just market fake out. Again, it would have faked me out. I haven't taken any trades on this, but I would have bet that support would have held there around 150.5. So Miko, you first, and then we'll go to Marco on dollar yen. What do you think? What do you make of the price action? And are you bullish? Are you bearish? What would have to happen to get you to kind of be biased on this one?
Yeah, I'm actually kind of just sitting on the fence with dollar yen now. Like I said, the way I look to come with my bias and look to come with my bias and my directional where I want to trade is purely based on the full H highs and lows. If you're creating higher highs and higher lows, I'm looking to buy, and vice versa. This is creating higher highs and higher lows. However, on the higher time frame on the daily chart, we're just trading such a big level here on the daily chart. So I'm reluctant to find any long positions in this area, and I'm kind of just waiting for dollar yen to move away from it, either break higher, continue the bullish trend, and then I'll be more than happy to start looking for my long opportunities, because at this point I've got that level behind me, so it's acting as support rather than resistance, or just start to break structure completely, start breaking through some lows and start giving me some lower lows and lower highs. And then I'll be more than happy to start to short the market, because at that point we've had a big rejection from that daily level. We had a very big move, maybe could see something of the sort again. So if I do start seeing the market start breaking through some lows, in particular this low here, which is our most recent low, which gave us our most recent high, then I'll be more than happy to swap my bias around. But yeah, the market is still pretty bullish, but I just can't be looking to buy in that big zone. So I'm kind of just sitting on my hands, waiting for either a big break high or a big break low, and then I'll start planning my trades.
Fair enough. Yeah, Marco, same question for you. Again, dollar yen, really big pop followed by the Marco pattern, the big drop following it. So we know where you stand with that. So let's get your take for maybe people who are not so familiar with what I'm calling the Marco pattern.
Sure. So that was on the 4 hour, I believe. And on the 4 hour, definitely looks like it's printing a V reversal. Although when I look at it on the 1 hour, which is something I focus on, it's not really showing me what I want to be seeing. So when I see a V reversal, I want to see sort of same momentum going up and same momentum going down. So same sort of legs, something like this, and then going down in a similar manner. What I'm seeing here on the 1 hour is actually price kind of struggling to go down, kind of breaking and retracing. So I would not be surprised if this was just some sort of a pullback right here. I'm seeing some definite strong momentum in this leg, and then right here I'm seeing breaking the lows, retracing, kind of struggling to go to the downside. So I would not be surprised if something like this happens on the 1 hour chart. But on the 4 hour, yeah, I would agree. It looks like a V reversal. So on the 4 hour, I would actually probably forecast something like this.
And I would add to it in terms of dollar yen. I know it's technical Thursdays, but I just can't help myself. The Fed yesterday fundamentally came out and what I think to be one of the most dovish sounding Fed meetings that we've had since this whole interest rate thing started. And what I mean by dovishness is Jerome Powell basically seemed to deny opportunities to be more hawkish, more aggressive, got to get inflation down. He denied that opportunity several times during the press conferences. The point that I bring that up with when talking about dollar yen or dollar in general is that seriously calls into question where the dollar is trading. I mean, we've talked about the dollar index together, guys. I mean, for quite some time. I think it's now showing up in the price action. In fact, I think I'm almost to the point where, yesterday I was saying I think dollar can remain kind of neutral, staying in this range. But after that Fed meeting, if we get further conversation like that, I would be very keen to see if we break out lower. And perhaps where this dollar is trading, which has been off the back of a Fed that has just pounded the drums against inflation, if that stops, as it seemed to have sounded to stop a little bit in yesterday's meeting, I think it will reflect in the technicals at some point. I think it may already have started. And again, I think we may even see the breakout. So I would just say for the technical traders out there, even if you don't necessarily look to read into the fundamentals too deeply, maybe a confirmation signal would be a breakout to the downside on the dollar index. Now, I'm especially talking to gold bulls. I'm talking to perhaps all of the people who have been sick and tired of watching the euro and the pound fall against the dollar for several weeks straight. I think we might see something change in that narrative. And one last market, not one that we talk about here, guys, very frequently. This is TLT, and it's trading up more than the stock market in the pre-market hours. These are bonds shooting up here this morning, perhaps confirming what we're talking about on the fundamentals, which is, of course, possible cooling in terms of that Fed hawkish narrative. And again, that will reflect heavily in the currency trading world. Gold traders will watch that. You have a lot of stuff that weighs on what happened yesterday. And I think that the follow-through moves could present some wonderful trends for all three of us, right? Because we're all kind of
that's
looking
like
for those
exactly.
markets. Yeah. What were you saying, Marco?
Oh, so I was just saying that's exactly what we wanted to hear, like some interest rate changes, some Fed decisions. It's very good for traders. It moves the markets, creates trends. So it doesn't matter if it goes up or it goes down, like as long as it's going somewhere.
Yeah, absolutely. And I think, at the end of the day, if you scroll out on, we could do this together. Just let's take a look at pound dollar, for example. If you're somebody who trades the pound and you look at the weekly chart, these trends are so clearly this ever since like 2021. All of these trends have just been so heavily reliant on the Fed, single-handedly, the Fed and the Bank of England to a degree, but really the Fed. During this time, the Fed just pounded the drum so hard. Then in the start of the year, it sounded like the Bank of England had to do a lot of catch up. They needed to really pound their drums to keep up, and the Fed wasn't doing so much. And now for the last, several weeks, it's been back to the Fed kind of pounding the drums. But there potentially, what I'm pointing out here is there perhaps could be a bigger leg higher coming for the pound. Now that perhaps that is giving early warning signs that we're back to this phase again. So even though, again, it's not necessarily fundamentals do not give me entry signals by themselves. Technicals do that. They do give me kind of that clarity on what's going on and what's going to drive the trends that we all need in order to make money. So it can be really key.
Don't forget to check out the links in the description if you want our broker recommendation, access to our free Discord, free Edge Finder, or want to chat with us on Telegram. Remember, you can watch us live in the markets every morning starting at 9:30 a.m. Eastern Time, and we have lots more free trading tools and content available on our website, a1trading.com. Thanks for watching.